Staying with that story, let's take you back to Pretoria, where the South African Reserve Bank's Monetary Policy Committee has kept the policy rate unchanged at 7.5%. Now, 4 members preferred this action, while 2 were in favour of a 25 basis point cut. Business reporter Ntokozo Khumalo attended the rates announcements and joins us now live. A very good afternoon to you, Ntokozo. A little bit of a surprise for others and not so much of a surprise for some.
Well, it certainly was an expectation, as well as that 25 basis cuts. As you rightfully said, 2 of the members voting for that 25 basis cuts, while 4 members chose to hold. And that was expected by at least 4 or at least some of the economists that were polled by Bloomberg. But the hope was, of course, for South Africans to enjoy another cut. As you just heard, in your conversation now, really those geopolitical tensions being the key concern for the SARB that they're watching closely. And while there is some positives on the horizon, it is really on how South Africa will pay in that geopolitical market. In the statement, the Reserve Bank governor, they're highlighting that Germany is out to invest more in security and infrastructure, which would likely, boost European growth. China also announcing that new stimulus measures that would boost demand. So some positives when it comes to some of the other trade partners that we have outside of the United States. Governor also highlighting the risks of South Africa losing those AGOA benefits and what it would mean for economic growth, as well as just some of those exports that go out to the United States. And as you rightfully said, I did speak to business owners earlier on today who were hoping for a rate cut, but of course saying that they've planned around the SARB holding the interest rates at this decision. So something that they've been planning for at least from the end of last year. And when it comes to that inflation issue, our colleagues at Reuters asking the governor, why does it seem that we're putting so much weight on geopolitical tensions and threats, some of them that have not even materialized yet, when our inflation outlook is looking a little bit more positive and much lower than that 4.5% mid-target by the Reserve Bank. But the Reserve Bank then, all the members, they're pushing back, saying that the only certainty we have when it comes to inflation is the print that just came out, but we don't know what the near future holds that might then impact that risk profile. So while domestically things are looking a little better, and the concerns that the SARB has is issues such as Eskom using diesel, that of course then affects industry and then again has that trickle-down effect on the consumer. So really that vicious cycle, Masa, that we continue to play in, where once inflation seems to be easing, other risks do emerge in the economy or outside of the economy, but could impact in the medium term. So those parts of the factors that the 6-member Monetary Policy Committee looked into when making the decision to hold at 7.5%, Masa.
And Ntokozo also mentioned in that briefing as well was just all these moving elements, but how different this MPC meeting was compared to others when we think of the budget being delayed. Tell us a little bit more about those concerns as well and challenges that they faced.
Absolutely. So that postponement of the budget, obviously then, pushing back a little bit of some of the forecasts that the Reserve Bank would then use to determine the trajectory of the economy and how subdued the inflation would remain. They did, make that provision for that initially proposed 2 percentage points increase in VAT. Now now, 0.5 percentage points. So a little bit more work will need to now be done by the SARB before we get back, come back here in May to see whether we are likely to start seeing increases or whether the SARB will continue to hold or even go back to cutting again, something that both business and consumers will look out for. So certainly that delay having some impact into how the Reserve Bank is able to forecast the direction that the economy is taking, the kind of investments that it's likely to bring in, how the rand will continue to react to it in the markets. But several issues that Reserve Bank Governor Kganyago also highlighted that could, in the medium term, improve the economy's outlook. And that's, of course, ensuring that we stabilize our debt levels and those debt repayments. A tricky one to do, considering that governments or the National Treasury is trying to still raise those revenue, and that one of the reasons why VAT was increased by that 0.5 percentage points. Also investments to ensuring that our SOEs work optimally to be able to attract investment. So those issues still on the table on what we are likely to see then in May and the other sessions that the MPC is likely to hold in the rest of the year. So if you remember, Masa, when we were closing off the last year at November's announcement, the sentiment was that consumers and businesses may benefit from the SARB being able to cut for the entire year as those economic conditions domestically were showing some improvements. But of course, clearly those geopolitical and trade tensions a real concern for the Reserve Bank, and it is a wait and see at this point, Masa, and of course then looking at the impact of that budget postponement, something that economists are also likely to still dig into when it comes to then how then it affects the trajectory the SARB takes for the rest of the year, Masa.
Ntokozo, thank you so much for that detailed report. That's our reporter, Ntokozo Khumalo, coming through to us live from Pretoria.